Negative market sentiment was setting the tone on Wall Street in the early session. Investors are worried about a new coronavirus outbreak, which could entail another shutdown. So, amid risk aversion, the US dollar can grab a chance to grow as a safe haven asset. Today, a series of macroeconomic data is on investors' radars. Futures on the Dow Jones lost 0.6%, and the same drop was recorded for the S&P 500. The main US benchmark indices are trading today with minor swings up and down. Yesterday, the stock market incurred first losses following a 4-day winning streak. Investors fear that growing infection rates could overshadow the green shoots of recovery in the US consumption activity, which is the catalyst for the global economic growth. New outbreaks in China and Germany dampen investors' confidence about a rapid economic recovery following a severe downturn in April. Interestingly, despite a surge in new coronavirus infections in 12 states, Donald Trump does not find it appropriate to impose restrictions. He assured markets that the US factories are going on working. China's chief epidemiologist said today that the recent outbreak in Beijing had been brought under control. Some recent reports showed a record bounce of the US retail sales in May and also an unexpected increase of employment in May. Today, traders are looking for clues in the weekly update on initial jobless claims, which is seen as an early barometer of the US economic health. The number of first-time claims for unemployment benefits dropped by 58,000 last week to 1,508,000. The fresh score undershot the consensus. The market expected a deeper decline of 224,000 to 1,300,000. Nevertheless, the Labor Department has been reporting lower figures for 11 weeks in a row, following a historic spike of 6,087,000. Mixed epidemic rates worldwide, alongside with geopolitical tensions in Asia, reinforce demand for shelter assets. So the US dollar is taking advantage of the risk of mood and regains footing. Today, it's trading higher against its main peers. Following a weekly update on jobless claims, the US dollar index gained 0.22% to trade at 97.20. The US dollar versus the loonie pair reversed its trajectory upwards. The loonie weakened to 1.36 versus its American counterpart. On condition of a further upward correction and a breakout of resistance at 1.3686, the technical chart will signal the uptrend in the midterm. Sellers of the dollar versus the loonie pair tried to test the level of 1.35, but with no success. If sellers manage to break this level during the next wave, the currency pair will head for 1.3450 mark. The US dollar has rebounded from a 3-month low hit last week. Nevertheless, the bullish outlook is rather shaky. Upbeat data proves a gradual recovery in the US economy. The US stock indices are firmly trading at elevated levels despite the ongoing downward correction. That is all for today. Thank you for watching and see you back tomorrow.